So yesterday we got quite an interesting market, but today I think we need to get through some of the important things. Yesterday we got the Apple conference. We had Amazon officially doing their 20-1 split. The next split that we have that's coming up would be Google going for a 20-1 split as well. And then afterwards we also have Tesla going for a split that we have not yet known for what amount. It could be 20-1, it could be 10-1, it could be 5-1, but we are not sure as of now. All right, but anyway, let's cover some news today. All right, let's start with the Twitter deal. Elon Musk threatens to end the Twitter deal over lack of information on the spam accounts. So if you are not aware of it, for Twitter, they actually reported, according to all the filings in the past, Twitter always reported that they have 5 to even 0 to 5%, no more than 5% of bots in the community. But if you have been using Twitter any time in the past decade, you definitely have seen a lot of bots, spammers, people who are just out there just spamming out information, trying to fish for your information and such. Pretty bad, okay? And when Elon Musk said that he wanted to buy over Twitter, basically it's obvious that Twitter had this whole spam issues, this bots issues. And what Elon Musk wanted to do is saying that, can you guys give us the proper amount of bots? At least let us know how many bots there are. Okay, and something that he actually brought up in the All In podcast, which is one of my favorite podcasts as well. He basically said in the podcast saying that, if you buy a house with 90% of termites, okay, are you actually buying a house or are you buying termites? Okay, it's the same thing. Because right now, Elon Musk wants to buy over Twitter. But if you're buying over Twitter with 50% of bots, are you really buying over Twitter, an active community platform, a social media platform, or are you just buying bots? Because this actually matters. Okay, this is not like any other brick and mortar shop where you can just show actual results and such. A social media platform actually plays a bigger role, and having a huge percentage of it actually being bots would actually just demean the purpose of you actually acquiring Twitter in the first place. Okay, so over here, Twitter said that it will continue to share information with Elon Musk. Texas launches investigation of Twitter's tally of fake bot account. Okay, but I did talk about this in the past. Okay, I did say that this might be a very, very possible way for Elon Musk to actually renegotiate his deal. Okay, I did say it because I think that if I am Elon Musk and I think that 54.20 per share might be too high, especially what the market is doing right now. Okay, if the market is doing really, really well, I wouldn't really care. And especially looking at Tesla right now. Tesla is just kind of like floating at the $700 mark. Okay, I would think renegotiating the deal would make a lot more sense. Okay, and by renegotiating the deal, it could come down to, I don't know, $44.20. It could come down to $42, because since he kind of like interesting numbers, which is why he go throughout all those things. So I can see him actually bringing down to $42. That could also be a possibility as well. Okay, I do think that a renegotiation could definitely be a possibility. And of course, there is a clause saying that if Elon Musk were to get out of this entire deal, there will be some payment that he have to pay. I think it's about $1 billion or so. Even then, it is also not going to be qualified as well, simply because Elon Musk can just say that, because the filings that Twitter actually gave to Elon Musk was invalid to begin with. Okay, bots were not no more than 5% for obvious reasons, and because of that, then Elon Musk can just kind of fight throughout with that clause in mind. I do think that. Of course, Twitter can also come out and just be like, we have our whole. Twitter can also do a filing or a check saying that, from as much due diligence that they did, 5% is as high as it is. They can actually show that kind of information to kind of fight back. So I'm not sure how this will actually turn out, but I can definitely see this as Elon Musk trying to renegotiate rather than just getting out of the deal completely. Okay, so. Over here, Twitter has refused to provide the data necessary for him to facilitate his own evaluation of the numbers of the spam and fake accounts. Twitter accepted $44 billion bid to take over the company and go private. This is a clear material breach of Twitter's obligation under the merger agreement, and Mr. Musk reserved all rights resulting therefrom, including his rights not to consummate the transaction and his right to terminate the merger agreement. We'll continue to cooperatively, share information with Mr. Musk to consummate the transaction in accordance with the terms of the merger agreement. We intend to close the transaction and enforce the merger agreement at the agreed price and term. Of course, this actually brought a lot of turmoil around Twitter's pricing. Twitter went down below $40 at about $39.57. I think right now it most likely will be less. The TWTR, let's check. Right now it's at $38.90 in the pre-market. I do expect it to kind of go even lower as more talks happen with Twitter in the upcoming few weeks. And of course, if it actually comes down to it that Elon Musk is not going to be buying over Twitter, that's going to be a whole nother thing. But I don't think that's going to be happening, because Elon Musk has already secured all the funding that is needed to buy over Twitter. I don't think he's just going to be like, oh, you know what, I don't want Twitter anymore. I don't think that's going to be how Elon Musk will actually do this entire thing. Okay, so we'll see how it goes. Okay, by the way, in the Bloomberg side of things, Elon Musk formally and forcefully revived his assertion that Twitter has a serious bot problem and threatened to walk away from his deal to buy the company if the social network doesn't do more to prove its users are real people. Okay, in the securities filing on Monday, Elon Musk said he thinks Twitter is breaching their agreement by not meeting his demands for more information about spam and fake accounts. Behind the scenes, the deal is proceeding. According to people familiar with the matter, both sides have been meeting regularly, sharing information. Okay, he's joking here. He's trying to create a paper trail. Okay, the unfortunate thing for Musk is that the termination provision under merger agreements don't allow for buyer's remorse. Okay, but this is not buyer's remorse. Okay, what they are trying to say, the law firm, okay, is trying to say that this is just basically buyer's remorse for Elon Musk. But I don't think that's the case. Okay, it's true that Elon Musk is trying to use this time to renegotiate, because honestly speaking, any respectable businessman would definitely want to take this chance to actually renegotiate, especially with how the market is going, like what I said before. Okay, everyone knew that $54.20 per share was overly paid, was overpriced. Okay, there was no social media company that's going to be worth that much. Okay, let alone Twitter. And because of that, I do think that Elon Musk kind of agreed that I think he also realized that he kind of overpaid, and he's finding ways to renegotiate. And which is why he kind of brought up the spam accounts at the start. And he kind of just, like what they're saying, he's creating a paper trail. Okay, so I'm just saying, okay, as much as we think that Elon Musk can do great things for the earth, he's a philanthropist, whatever you want to call him, okay, he's still a businessman. And I think any respectable businessman would renegotiate this deal. All right, so let's move on to the next news before we just get trapped in here. All right, next up, Janet Yellen faces lawmakers as Biden officials grapple with inflation. And also, just a heads up, I will also be uploading a video on inflation expectation tomorrow, because our inflation reading is going to be coming in on Friday, which would be the 10th, I assume. So yeah, stay tuned for that video. All right, anyway, moving on, Janet Yellen faces lawmakers. Okay. Ms. Yellen will appear before the Senate Finance Committee on Tuesday. With inflation running above 8% on an annual basis, the highest rate in 4 decades, she is also expected to face questions about the rising prices, which Biden administration has said is top economic priority. Okay, especially with gasoline prices, groceries, and other goods have become a source of frustration within the White House. As many Americans report dim views of the economy despite low unemployment and the rapid recovery from the brief recession back in 2020. Biden administration officials, including Janet Yellen, began a wide-ranging publicity effort this month to try to improve Americans' feeling and demonstrate their commitment to fighting inflation. Let's see, do we have more? Okay, yeah, so I think this is basically just an article talking mostly about inflation and what Janet Yellen would most likely be going through with those inflation talks. Okay, do understand that Janet Yellen do hold a very, very critical role. Okay, unlike Jerome Powell, she do have to talk to all the lawmakers, the Congress and such. where she have to explain her stance on the debt limit, and also inflation situations. Okay, of course, I think about one entire year ago, okay, we probably saw Janet Yellen talking a lot about the debt ceiling. That somehow people have kicked the can down the road to the point where people kind of forgot that there's such a thing called a debt ceiling. Okay, it's kind of funny that chances are we are gonna see it in the next 2 months or so, when the debt ceiling comes back and haunt us again, because let's not forget, Biden is still signing in bills over and over again. So I can totally see more more bills coming in, and that would cause some worries. All right, so next up, we got iOS 16, macOS Ventura, a new MacBook Air, and more. Okay, so this was from the yesterday's conference for Apple. Okay, I didn't really go through the whole entire thing, so I cannot really tell you what was actually going on with the whole Apple conference. Yeah, but I did hear about a new iOS. Okay, but I'm not sure what the new iOS is going to be doing. Let's see. Come this fall, you'll be able to edit and recall send messages in the Message app. Honestly, in Singapore, we don't really use the message app anyway, so it doesn't really affect us as much. The fitness app, previously reserved for Apple Watch users, will be available to everyone. iPhone motion sensors, which already estimate our steps and distance for the health app. Okay, cool. Your lock screen, checking the time 100 times, about to get fancier. Cool. Android phones have long had custom lock screen and were once the object of iPhone's envy. At last, iPhone will show calendar, events, weather, and other customizable information at a glance. Great. This is a good QOL upgrade, I think, for Apple. Even for myself, I do love it as well. Okay, great. My car do have a CarPlay, so maybe this would be good for us. Apple's iPhone-friendly in-vehicle infotainment system. Now the Apple teased the next generation of CarPlay. I'm thinking about holding off on my next vehicle purchase. Oh, okay. Well, that's going to be the next one then. It's a full Apple takeover of the dashboard, so you can get speed and other standard instrument data superimposed on top of the turn-by-turn directions. Oh, that's cool. That's so cool. Okay. I'll definitely be looking forward for this then. Apple listed partners including Ford, Honda, and Volvo. The company said vehicle announcement undue until late 2023. Okay, with the macOS Ventura, I did receive a notification from my own MacBook saying that they want to do this, but my MacBook didn't have space, so I didn't bother. So yeah, okay, desk view shows a second angle, a bird's eye view of your desk for demos. By just using the iPhone ultra wide angle, blah blah blah. iPad OS 16. They actually had a software update yesterday, but it didn't work because I was using my iPad. So oh well. The Watch OS. All right, cool. A lot of QOL improvements, I guess. Next up, we got commercial property sales slow as rising interest rates sink deal. Okay, I think that this actually comes without saying. Okay. We have already talked about how the neutral rate has always been continuously going up, especially with all the FOMC meetings that we have. Okay, constantly it's going to be a 50 basis point increment until 25 basis point increment, or whatever it is supposed to be the case according to Brainard. Okay, but commercial property sales slow as rising interest rates sink deals. Okay, it's not just going to be commercial properties, it's going to be industrial properties, it's going to be residential properties. Residential properties is already looking at a huge sudden lack of influx for people who want to buy. Okay, looking at new home sales. Okay, April alone showed us horrendous numbers. Okay, April alone showed us 16% decrease in new home buying. Okay, and that's definitely enough to scare people. Of course, you also have your existing home, your existing home sales. Those actually also dropped a little bit, but it did not drop as much as the new home sale. Okay, and of course, now we're looking at commercial properties. That's going to be starting to scare the real estate market just a little bit. Okay, so property sales were $39.4 billion in April, which was down 16% compared with the same month a year ago, according to the MSCI Real Assets. The decline followed 13 consecutive months of increases. Okay, hotels, office building, senior housing, and industrial properties recorded big drops in sales. Sales of other property types such as retail and apartment rose in April, but analysts and brokers said activity may be now slowing in those sectors too, as rising interest rate keeps some investors from making competitive offers. Okay, Of course, for us, we're not really in US, so I cannot really talk too much about the real estate in the United States. But yes, definitely, we're starting to see some sort of effect coming in with all the raising of rates. All right, next up, we got Amazon's first stock split since 1999 taking effect. Okay, like I said before, I do think that for people who do not understand what a stock split is, it simply means that, if you had one stock before, now you got 20 and the price just divided by 20. Okay, this is not going to be affecting market cap. Okay, this is not going to be affecting the price of the stock on its own. However, what it is going to be affecting for a stock split, which is two different things. I covered this before and I'm going to cover it again briefly. Okay, the first things that we need to take into consideration is entry point. Okay, for people who couldn't buy into Amazon because it's way too expensive before, it was $2,000. It was a 2003, 2004. I don't know. Okay, it's too expensive. Okay, I'm not gonna buy into Amazon, so forget about it. Okay, that's the first thing. Okay, so right now, if now it's now divided by 20, okay, Amazon is now what, $150, $130 is cheap. Okay, you can get in easily. And when you can get in easily, you're just going to buy more. Okay, that's going to be creating more buying momentum upwards, which is why, okay, according to my prediction that I actually made earlier in the year, in January, actually, I made a prediction that Amazon is going to be announcing their stock split this year, which happened. So yeah, I'm happy that, Amazon is doing that, because this way, the barrier of entry is now lowered for people who want to get into Amazon. The second thing is for option plays. Okay, for people who knows about option, heard about option, knows for a fact that option deals with stocks that have at least 100 shares. Okay, back then it was too expensive for people like you and I to deal with options with Amazon, Google, all these companies that have huge barrier of entry, very high barrier of entry. Right now, you're actually bringing it down to about $130 or so. Okay, options is now very, very possible for us. Okay, you can buy your call option, you can sell your call options, whatever it is. Okay, option playing is now a lot more possible for stocks like Amazon and Google in the near future. So yeah, those are the two possible factors of why a stock split matters. All right, next up, we got Bitcoin tumbling as much as 7.1% to drop back below $30,000 again. Okay, so yesterday, I think during the market rally, we actually saw Bitcoin went up to 31,000 again. It was great, but then everything started going back down again, which is why, like I said before, cryptocurrency is so volatile. Okay, and I've already been talking about this for over a year. Okay, which is, even for myself, I do not put more than 15% of my entire whatever I have into investing, my entire portfolio. I do not have more than 15% of it inside cryptocurrency, simply because of the amount of volatility in cryptocurrency. Okay, so I only have a maximum of 15%. At one point, I had 18%, but that was because cryptocurrency was going up and stocks market was going down. So the percentage base kind of changed. But then afterwards, cryptocurrency went down as well, so it kind of just leveled out on its own. Okay, so the largest cryptocurrency fell as much as 7.1% to 29,000, a level not seen since May of 30. Other tokens also declined, with Ether falling up to 7.3%, down to $1,700. Avalanche dropped as much as 9.3%. Okay, this move come a day after Bitcoin climbed above 31,000, sparking expectation among some investors. They have more room to rise, but it faced significant resistance around 31,500. Okay, the market is languishing. Without a catalyst to the upside, current sentiment is likely to keep prices range bound with some clear and immediate risk of a break lower. The decline for crypto came as US stock futures stayed in the red and the dollar extended gains. A jump in treasury yield on Monday fueled concern that rising borrowing costs could induce a recession. Bitcoin has been strongly correlated with risk asset for much of the past couple of years. So yeah, nothing crazy. Honestly, it's just that Bitcoin just went down huge and they just wrote an article for it. And honestly, I don't think that should even be that big of an issue anymore. Okay, but anyway, that's all we have. The other one is just basically talking about how futures is down and such. But anyway, I think that's all I have for today's news. Remember again, stay tuned for tomorrow's news, tomorrow's video on the CPI expectation. Okay, anyway, thank you so much for watching to this far. If you're watching this far, please like this video and also subscribe to my channel. It helps me out a lot. Anyway, thank you guys so much for watching. I'll see you guys next time.